Also looking in these markets at the moment, inflation is of course the topic du jour. As always, Pete McGuire from XM standing by with all the details. Pete, just quickly, we saw the data release coming out from the ABS, and a twin set of pretty strong data.
Absolutely, David, and good morning. Yeah, that you just brought me up to speed on that number, 7.3. That's very, very strong, and I'm sure that our central bankers will be ratcheting up, and their first quarter will really show what it's all about and what impact that's going to have to our economy. And I think it's probably taken everyone by a little bit of surprise. I noticed that retail sales were strong. So the old story, everyone's got a job that needs a job. Whether you've got a pay rise, that's a different matter. But the inflation is certainly galloping ahead. And how do we rein that in? And how long does it take to see some form of reversal?
Yeah, can't stop, won't stop when it comes to spending up at the tills, it seems, for the time being. Pete, that's one thing at the moment, and a pretty important piece of the jigsaw puzzle for the RBA. More broadly for markets, it's really going to be about that US CPI report out tomorrow evening our time. What's your expectation around that? Because I get the sense that investors are very, very excited about the prospect for another big undershoot like we saw back in November.
Yeah, that seems to be the general mood, David, and everyone's saying it's hard to put a number on it, so I'm not going to, reach out, but certainly weaker than what we saw. So that's a good sign, and whether that is the actual number and what moves forward from here, we have seen a very solid downtick as far as energy prices and the impact to the Bowser and the spending power of the wallet. So that's been a saviour, and if that remains, then that's a good sign for the consumer, certainly in the US. Weaker US dollar has also helped. So, yeah, the general theme is let's see if it does do what the analysts are saying. Jamie Dimon, I notice he's saying you need higher than 5% rates. So that seems to be the mood at the moment. The Fed's going to continue to chip up, and that could be the storyline over the first 3 to 6 months of the year.
We know how important that US dollar strength story was when it came to rattling financial markets last year. It's come off the boil quite a lot. From a technical perspective, how is it looking? It's rolled over, but how bad is it looking on a technical perspective?
Well, David, I mean, it's at 103.30. We thought we may have seen a 102 handle in the last 36 hours. It didn't quite make it. I think it got down about 103.15 or so as the low. You have a look at that Aussie dollar, see what we've, in the last 10 weeks, I mean, currency trading has been dynamic. It's been the place to be. And the movement has just been extraordinary, down from that, 112, 113 down to 103. Aussie dollar, big boom to the upside. Euro, nearly at 107.50 now. And the yen's been very, very wild. So, the story is that I think 102, 101, I want to see what the CPI number is this week. We had a weaker than expected probably jobs number come out Friday night, that non-farm payroll at 223,000, and was the weakest monthly report all of 2022. So yeah, it's going to be a fascinating 3 months, and I'm really looking forward to how this quarter all moves up to see how we are at Easter.
I want to go and finish off talking about gold. It didn't glisten so much last year, at least in US dollar terms, but the gold bugs got the chest out and feeling pretty chipper about themselves at this point in early 2023. Do they think they've reasonably maintained that optimism over the course of the year?
Well, I think, David, that US dollar being sold off so strongly, that's been a really solid move as far as gold and silver. Silver's up since around about that October period, about 30%. So it's gone from 18 nearly to 24. I think it's currently sitting, I've made a note here, silver's at 23.75. But yeah, the gold market has been one-way traffic, and it's been extraordinary. And, people are saying, well, many analysts are saying, will we take out 1900 this week? It seems to be very, very solidly bid up, and don't get in the way of a bull market. I mean, it's very, very strong at the moment. Continued weakness, US dollar, a lot of uncertainty globally with interest rates and certainly inflation. So gold seems to, if it keeps on ticking, David, I think 2023 is going to be a solid year for it.
Just a real super quick one to end off as well. We're seeing a bit of a rebound in Wall Street, and a lot of people, as you mentioned, I know we spoke late last year, that 5-day rule, a lot of people put a lot of weight behind it. So managed to go and eke out a gain. So what are we looking at, technically speaking, when it comes to those key US markets moving forward?
Well, David, I mean, the Dow's performed reasonably okay. S&P's been hammered, but it's still showing, nice numbers at around about 39.50. And we've just got to see if we see a continued move to the upside for NASDAQ. You're sitting there at up 1% overnight. That was strong. So, as far as technicals are concerned, I think that Santa Claus rally has continued into the new year. I just want to see how it all rolls leading up to really the end of the month. We've got the earnings coming out this week. I want to see performance and some of those big companies. We just got to check to see how they're moving forward, sales over that Christmas period, and of course, many companies are looking at downsizing. So that's probably not a good sign as far as economic health, and that's one way that they're going to boost numbers.